So look, I think for us there's a couple of areas that we see some growth in. I think within commercial assets, office, industrial, retail, we see there being some opportunities in metropolitan office. So what I mean by that is, offices in fringe CBD areas predominantly, whether it be, areas like St Kilda Road or Parramatta. So we see that the pricing of those assets is one that probably hasn't moved as far as brand new buildings or prime assets in CBD areas. So we see there being a bit of an opportunity set there, and I think that some of these assets, there's still a continuing demand for some of these assets where floor plates are not as big. So for small businesses where they want to have premises which is not way out in the suburb, but still central to commercial amenity, but not having these huge floor plates and paying a slightly lower rent or a lower rent than what you would in the CBD. We certainly see there being significant demand remaining in those types of assets, and we see some opportunity sets in that class going forward. I think other than that, we continue to see opportunities in asset classes which are backed by more broader demographic factors rather than economic demand factors, and so in that I would say healthcare, childcare and the like. We have a material property trust investing in healthcare assets, private hospitals, medical centres, aged care facilities and the like, and I think, look, given the ageing demographic of Australia, the increasing demand and need for healthcare services as the demographic gets older, we see that being we've been managing assets in that city since 1998, so we've been looking at it for a long time, but we are starting to see an increased amount of interest from other investors in that space. They're long leases, very secure income for investors, and for example, during the GFC, the healthcare assets stood up in a much more resilient way on a capital value than most other commercial properties. So we sort of see those opportunity sets. Childcare is slightly different. It's more like, under government subsidised sort of thing for young kids, whereas aged care is obviously at the other end of the spectrum. But there's continuing demand for those types of services in the economy, and whilst they're slightly different to a commercial property, they're a bit more specialised. You've still got to think about the same things, where are they located, what happens at the end of the asset's natural life today, and who is your tenant. The quality of your tenant is really important. So the same real estate fundamentals, but with some, potentially some supporting drivers that, are attractive to investors.